Welcome back to Young Bucks. This week we're covering a lot. We're hitting on Paul Manafort's indictment and how the Trump administration is handling it. We'll also discuss beer distributor Constellation Brands potentially investing in the cannabis industry. Ben and Matt will touch on the CVS Aetna buyout, and then Ben will bring it home with the call-out episode this week. You don't want to miss that one. Stay tuned. Thanks for joining us.
Hey everybody, welcome to What the Buck, the segment about money and college football picks, special Halloween edition. I am dressed like the best football program in the country, the Georgia Bulldogs. Sam's dressed like a baseball guy. Krebs looks like he's cold, and Ben is an investment analyst. So great costumes by everyone. Let's get going. First topic up, Paul Manafort. He's in a lot of trouble. We've been hearing this name a lot for the last, year and a half, 2 years. You know, he's running Trump's campaign, all that good stuff. All kinds of bad news out there, but now we're seeing conspiracy against the United States of America, which seems like a charge I wouldn't want to my name. Ben, you got thoughts?
I think Paul Manafort's the guy who's getting thrown under the bus. I think that
Hot take.
this happened I think most of the allegations are prior to when he actually joined the Trump campaign, and I don't think that's a coincidence. I also think that this is a guy who probably used every possible way to avoid taxes. I think that's just kind of the guy who he is. I don't know if it's illegal or not. I guess that remains to be seen by the investigation.
Yeah, I mean, Trump was really quick to come out and say, this happened before I had him working on my campaign, which is kind of one of those catch-22s. You're kind of damned if you do, damned if you don't if you're Trump. You know,
if you're Trump, what else do you say there?
I mean, you have to say that, but it's also kind of one of those things where it's like, let's say, Krebsbach was a serial murderer before we hired him. For me to be like, well, he did that before we hired him, doesn't look real great on our diligence either. But there's all kinds of, I think, like disclosure issues, what he disclosed, what he didn't disclose. Use of funds, I think, is kind of where a lot of this gets really hairy. I mean, I saw something, I didn't read the whole report admittedly, but about him spending like close to $1 million on custom clothing that he kind of, which seems a little bit more than just trying to get away with not paying taxes. But we've got some pretty wild schemes ourselves focused on clothing acquisitions. But
Do you think it has ramifications, either blowback on Trump or ramifications in the market?
Trump's untouchable, baby. At this point, really, I mean, it's one of those things I think most people just kind of like laugh it off and like move on. I mean, I'm sure it's going to be a huge headline. I'm sure Democrats are going to be really upset about it. They're going to continue to talk about it. But, it's kind of one of these like ongoing things where it's like you wonder what's actually going on that matters because there just continues to be just all this noise around Trump. And so far, I mean, does it affect his approval ratings? Maybe, but what's the tangible outcome of that other than polling and a talking point on the news?
I mean, what does that matter outside of next election?
At
this point,
I don't think it does. Yeah.
Did y'all see the poll that came out in the Wall Street Journal this weekend about his approval ratings?
Mm-mm.
And it was interesting. I don't remember what the numbers were, but the interesting thing to me was it showed his approval rating on various topics, things that have come up, like the hurricanes, North Korea, Iran missile thing, maybe some trade stuff, I don't know, in the NFL. Guess what his highest approval rating is on? The NFL.
NFL.
I will say I'm sure that's important for like the House in those elections. Like,
Yeah.
if Trump's doing really bad, I'm sure it doesn't bode well for Republicans.
Yeah, I think the midterm elections
just
I
thought
think
of
will be pretty interesting coming forward and seeing what happens there. In the NFL, I mean, I don't know if people realize this, but there's players kneeling for the national anthem. I don't think enough people are talking about that, and that's something we should definitely keep politicizing and talking about forever. Trump's going to keep it at the forefront of the topics.
I just thought that was really interesting.
Yeah, it's bizarre
'Cause
that people care that much about that to begin with.
Yeah, it's just crazy because I think that a lot of the NFL players taking the knee, they can say it is like they can say they're doing it for whatever reason they want. Part of that, I believe, is to say we don't support Trump and the way that he has handled stuff or whatever. And it's just interesting that I think it was pushing like 60% of the country came out and said we support the way that he's handled that, which is it was very interesting to me. I didn't expect that.
And we know our Uber driver in Boston supported it.
Yeah.
There we go. So
Shout out to our Uber driver in Boston.
real world pollsters here. Interesting story. Constellation Brands, basically liquor company. They control all kinds of big alcohol brands that you know and maybe love. But they bought a 9.9% stake in Canopy Growth, which is a weed company based out of Canada. They're on the Canadian exchange. Ticker is WEED. So pretty fitting there. But Canopy Growth is working on basically liquefying applications of THC and marijuana components so that you can actually have drinkable weed drinks. Seems like a positive play if you're Constellation Brands and you want to spend some money, you want to get in there. This is the biggest player in that space, and if you think, hey, we're on a path to legalization and we're on the alcohol side, it'd be really nice to corner that market early. Ben Krebs, anybody got any thoughts? I know Ben's a big weed guy. So,
I think with Canopy Growth, you're probably it's probably about a $200 million U.S. investment. It's $245 million Canadian. And I think just the idea of someone big like Constellation Brands being in that they're going to make that money quickly just because of the share price appreciation of that. At 9.9%, they could have acquired the company. They obviously don't want to at this point. So, it's an investment for them. They want to be a player in this space. They want to say to their investors that they're going to be a player in the space. And now they have optionality and a way to prevent other people from coming over the top and acquiring.
I feel like it has to be a matter of time before that gets more mainstream in the U.S. I'm talking about.
Yeah. Do you think it's worth it trying to gain the first mover advantage in that spot? Because we've been talking about for years. Weed's about to be legalized. People should jump in. Marlboro, are they going to jump into like weed cigarettes and whatever? And it's like, we're way farther along than we were. I don't know how long ago it was when California legalized weed, but I don't know if that investment's worth it right now. If you're a company of that size, just wait for it to actually be legal and have a market, and you have the resources to jump in at that point.
The thing is, they're probably gonna be paying a lot more for it at that point.
Right.
And if it's a certain thing, which, I think it's good. It's pretty certain to me. Like it's going in that direction. Like, why not get in on the ground floor?
Yeah, this seems like a cheap way to get in. And then the other thing that's interesting, I was talking to a guy that had actually done a lot of research on weed investing and just how to play it, because I think, kind of on a macro level, I think all of us think at some point it's going to be legalized nationwide, or I do anyway. I think you do.
I do too. I'm just saying that you also got to keep in mind running the operation.
Right.
So you got your upfront costs or whatever, just to, I don't know what it costs to start a weed manufacturing whatever, but then you got to keep that running for however long when you might not be. You're just running costs.
I think this is a
revenue coming in for a while.
And I think that's part of why this is a good play, is that this is actually an existing weed operation. So
right. There's infusing the capital right now, right? They don't take that risk.
Yeah, so they're buying
you
that.
Argue there's better uses of capital right now, but
and then so talking with this one fella, one of the things he pointed out that with marijuana, as long as it's not federally legalized, you can't actually get a patent on anything on it. So any technology related to marijuana, whether it's a liquid or a specific distribution method or a technology that you could get for 100 different, if you said, oh, this is a unique way of smoking tobacco, you could get a patent on it. But because it's not federally legalized, you can't get a patent. So his argument was that there actually is a first mover advantage, because he said it's almost counterintuitive. You can't get a patent on it, but if you're the first one to market with it, because no one else can get a patent on it, they're kind of saying, we don't want to touch that way of doing it because we've only got a handful of states in which we can market anyway. It's not worth us basically spending capital to recreate something you've already done if the only way we're going to get there is doing something different. So it's almost counterintuitive, but the lack of a patent is spurring on kind of this creativity in terms of how you're doing it.
It has to come to a head at some point, and the question is going to be, how does it happen? Does the U.S. federal government go and take California to court, or Colorado to court, or state of Washington or state of Oregon, and say, hey, what you did was illegal and we have laws on the books that make this illegal, therefore we're going to enforce this? Or do they come to an agreement, or does the state of California then say, hey, this actually should be legal, and who ends up buckling? And I don't know, and I don't know who that ultimately is. I think it's not. It doesn't get, I guess, traditionally more conservative people. It doesn't get them very passionate. It's not a passionate issue for them. Mm-hmm. So I would tend to think that side would buckle, but it's going to be.
I think you have to. If I'm a Republican seeking a way and some way to reach young people, which I think the Republican Party is trying to do desperately, I think that's kind of a layup way to do it, because are you going to, if you're strong on traditional values, so to speak, like, abortion and tax rates, and it's bizarre putting those two things together. They're obviously totally unrelated. But if you're strong on those type of things, you can probably keep your core and then say, yeah, and I'm pretty much fine with legalizing marijuana, and maybe attract some people in. Just seems like a smart political move.
And that's not kid ourselves. They will do it for the tax dollars alone.
Yeah, that sin tax. Throw that thing on there.
But that's the thing, though. Like, the Republicans could have done that a long time ago, like with gay marriage or something. It was like that had passed. Like, let it go. Like that's fine. Let it go. And you still got all these wackos out there screaming, no, I still don't agree with
wackos.
I mean, they're saying they're fighting a lost cause, and it's like you're just pushing voters away. Like, just drop it, move on, and maybe you'll pick up some of those voters. And they haven't done that. I mean, I don't know why you'd think that they would be smart enough to figure that out now.
We should be politicians.
Seriously,
we'd be good at this.
We're gonna all run for office. Switching gears quite a bit. JCPenney, famed department store retailer, whatever you want to call it, down to under $3 a share. Ben, I know you're real sad to see that.
I mean, it's just incredible. I mean, the stock trades less than $1 billion market cap now, less than $3. I mean, I remember when I was buying this at $8. Thankfully, I sold out like $9. But it's just a whole debt. The
One
debt.
of the few people to make money on JCPenney in the last decade.
The debt issue there is just phenomenal. So you got to watch out for that. Like, the value of a company is not just the market cap you see, but it's also the debt that they have. So when you add the debt plus the market value of the company, it's actually a lot more expensive than that, and that's where you have bankruptcy.
And the thing with JCPenney is they've been doing enormous amount of restructurings to try and get profitable, and they're still not there. It's
for years.
What other lever can you pull at this point to save yourself?
And this has just been like a lesson in futility for someone like Bill Ackman.
One of many lessons in futility.
Who brought in this CEO called Ron Johnson, who completely destroyed the company, tried to make it like Apple, because he ran Apple's retail chain, and I mean it was just a total dumpster fire.
I'll defend Ackman a little bit there and say you're just playing with a losing hand. I mean, if you look at Macy's or any of those other department store types, they're all dumpster fires. I don't know if you can win in that situation.
And
I'm a big Ackman guy.
Yeah, and you mentioned a lesson in futility. Ackman doesn't learn lessons. That's giving him too much credit. Just kind of bizarre. Anybody got any weird companies that are actually bigger than JCPenney at this point?
Better what?
Weed.
Bigger.
Weed.
Weed's a bigger company. Yeah, so it's kind of one of those things. I still feel like I see JCPenney's everywhere. At the malls, all that good stuff. But all right, to the important stuff. Football. The big three, myself, Ben, and Garrett, taking the lead at 23-16 in college football picks against the spread. Krebs coming in second, 22-17. Sam coming on strong at 21-18. So again,
we got a tight race here.
Everybody's hanging tight. Everybody's comfortably above 500. We'd all be making money in Vegas, I think. Picks this week, we got Wisconsin -9 at Indiana, Georgia -24.5 versus South Carolina, Alabama -21.5 versus LSU, Washington -21 versus Oregon, and then our bonus pick for the week is Oklahoma State -3 versus Oklahoma. Krebs, we'll start with you. Wisconsin -9 at Indiana.
Yeah, I mean, I've been wrong on Wisconsin a lot this year. Like last week, like they looked terrible against Illinois, and Illinois is a really bad team. They have like 0 home field advantage at Illinois. Indiana's a little different. They're not a good team, but they actually play teams tough at home. So I don't think this is an easy pick, but I'm still picking Wisconsin. I mean, at 9 points, I think you might as well pick Wisconsin. If you're a top 5 team, you should crush a team like Indiana.
And this line's moved some, you said, right?
Right, it's moved in Wisconsin's direction.
Yeah.
I think now you can get it like -12, but
Gotcha.
we did this yesterday.
Yeah, I like Wisconsin -9.
I got Wisconsin as well.
Wisconsin.
Big. Georgia, probably going to be ranked number 1 in the playoff poll, which they'll announce Tuesday night, which is tonight. It'd be really disappointing if they're second, but I think they'll be first. 24.5-point favorite against South Carolina. South Carolina's got a good record. They also haven't beaten anybody. I actually think South Carolina will cover the spread, though. At some point, somebody's going to play Georgia within 3 touchdowns, and I just think this is the week for that to happen. South Carolina's kind of one of those scrappy teams. Got a little bit of Will Muschamp versus Kirby Smart rivalry. Those guys go way back. So, yeah, I got South Carolina covering.
I got Georgia.
I'm not sold on Georgia myself yet. I mean, they have one good win against Notre Dame, in my opinion, so I'm taking South Carolina. That's a pretty big spread.
But the one thing I'll say, though, is
I'm
they've
not sold.
beat bad – they've crushed bad teams like they're
Right.
supposed to.
I mean,
and they're about to play
same like
another bad
I mean, that's the
team.
thing that I respect Georgia for that Wisconsin hasn't done.
Yeah.
That they've
Yeah.
crushed in like subpar opponents,
Right.
but still, I'm still taking South Carolina.
South Carolina actually has a decent run defense from the stats, and I think they can pass the ball well enough to actually stay within a shooting distance of
You went deep into
UGA.
this one, huh?
What's a shooting distance?
Yeah. What's
like
that in
within
football?
21.5 points.
All right, there we go. Bama 21.5 point favorite against LSU. Crazy. Just quick comment before you go. It's crazy that this rivalry has a spread that's more than 3 touchdowns.
It's crazy that's more than 3 field goals the way some of the past matches have gone. But no, I have LSU here. LSU has turned the corner. You know, I think.
They lost to Troy though. Keep that in
Right.
mind.
Well, so I think
And
LSU.
Mississippi State.
I think LSU losing to Mississippi State and losing to Troy was more of LSU just having a complete just meltdown mentally, on the field. I don't think that was as much as LSU just being like that bad. I mean, there's no way they're that bad. It's LSU. They get talent. They've got tons of talent.
Coach O's coaching.
And so they've been playing well lately. Again, they haven't played anybody good. They played. We still don't know if Auburn's any good or not. The only team they played that's good was Clemson, and they lost. And so it's just, I don't know. I think the jury's still kind of out on LSU. That's a huge spread for this type of rivalry. So I took LSU.
I got Bama. I really do think Bama's going to be second in the poll, and they're going to be pissed, and they're going to just run through LSU. So I got Bama.
I don't know. That's some good analysis. I like both that analysis. I picked Alabama, but I really have no idea.
It's a tough pick.
Yeah, I picked Alabama though.
I picked LSU because I agree with Sam. I don't think they've played absolutely anyone since they've supposedly gotten good. I mean, they beat Florida, right?
Mm-hmm.
And they beat
Auburn.
I mean, that says it all.
Oh,
Florida just fired his coach. I mean, because they lost to LSU.
Georgia's beat Florida. I mean,
Yeah.
What does that tell you?
yeah. Only by 35 points, too. It was brutal. Washington.
Well, and LSU barely beat Florida, didn't they?
Yeah.
They didn't crush them.
No, they won by 1 point.
There you go.
Washington, a 21-point favorite against Oregon. Talk to us about the Huskies and the Duckskis.
Man. So I went all the way up to Seattle and I watched 12 passes the whole entire day. And then I came back and I said, well, man, we can't throw the ball. And then I looked at the UGA box score and they completed 4 passes.
All we needed.
But we still racked up 44 points. I guess our run game is just phenomenal. But it was the worst rush defense. UCLA does have the worst rush defense in the country, not just the Pac-12. So the big question for this game is whether or not Oregon's quarterback, Justin Herbert's going to be back for the game. He's been drinking a lot of milk, according to the coach. I don't know how that translates into
Pac-12 coaches are the best.
into recovery. But I actually have Oregon because I don't think Washington covered the spread because they need to throw it, and I haven't seen enough from Jake Browning yet this season. And plus, we just lost our big tight end, Hunter Bryant, who's going to be out for a long time.
I forgot to bring that up. Like, how did Georgia win with 4 completions? Wasn't it 7 passes, 4 completions?
Yes. In
That's
fairness,
One was to the other
that's
team, I think.
incredible.
in fairness, 4 completions for like over 20 yards a catch. And when you have a guy like Sony Michel run 6 times for 140 yards, and your team averages 9 yards per rush and runs for almost 400 yards, you win.
Yeah, I just didn't want to talk about Washington.
It's savage that Georgia only threw the ball. It drives me nuts that we only threw the ball 7 times.
I took Oregon on this one.
Yeah, I've got Oregon as well. Browning, former Heisman candidate Jake Browning, big game Jake. This is a dark horse. Like,
By the way, the game is at 10 o'clock
I
on
would
the
be
East
tempted
Coast.
to put money on Oregon to win this one outright. I'm just throwing it out there.
I got Oregon.
All right, there we go. Bonus pick: Oklahoma State versus Oklahoma. The Big 12 is nuts. Everybody's got 1 loss. It's anybody's conference. Krebs, this was your pick. What you got?
I have like 0 analysis on this one. I just wanted to show the Pac-12 or Big 12 some loves because we like never do those games. I'm a big Baker Mayfield guy, so
Yeah, I like Baker Mayfield as well.
that's it.
I got Oklahoma, and I will say, like, the Big 12 is the most fun conference to watch right now.
Yeah, I
in
mean
my
this
opinion.
game's probably gonna be like 40 to 50.
Yeah.
Like there's
Yeah.
gonna be a lot of points.
Anybody
scored.
can beat anybody. I don't know that anybody from the Big 12 is actually good, but
Yeah.
it's really fun to watch.
Yeah.
Who did Oklahoma State play this past weekend?
Not Iowa State.
Yeah, no, they played at
TCU. played
TCU?
Iowa State.
TCU lost out, TCU lost to Iowa State.
Right.
Okay, I thought Oklahoma State
they
had
played
a
West
big
Virginia,
game.
I think, and they beat West Virginia.
They did.
Correct.
Yep.
Was that a close game though?
It was close for a while, and West
I mean,
Virginia
it was
came
like
back,
50
really
to
hard.
35.
Because I feel like Oklahoma wets the bed, like in every opportunity they get, and they've already wet the bed this year. So I feel like I got to go with Oklahoma because it's like they've already gotten it out of the way.
Yeah.
But I think Oklahoma State. I don't know. That's a tough one. I'm gonna go with Oklahoma.
That's the thing. Once you pee in your sheets, they're wet.
Like,
you
that's
can't
it.
re-wet them. Like
Right.
once they're wet, they're wet.
They can't get wetter.
Did you already?
Yeah.
Who you pick?
Yeah, I had Oklahoma.
I think in these games that you score a ton of points in like primetime games, like the home team has a bigger advantage than normal. So it's like there's just so many points. So I'm taking Oklahoma State.
Just so many points. I'm going to go for Oklahoma. I think you're wrong, Krebs.
I might be.
Also, I will take your bet on Oregon. What odds do you want?
I'll see what the books are. Like what they're showing.
No, let's just do it straight up.
Somebody pull up
You gotta
the
check the
money line.
books.
Yeah, I'm not gonna just like spout it off. Somebody will pull up the money line.
Sounds like not confident. I mean, I'm
they're a 21-point favorite. So
I'm
I'm
willing
not
to-
gonna give you even.
I'm willing to go up to 2.5 to 1.
It's gonna be
That's
way
like
more than
nowhere
that.
close to
It's gonna be
what-
at least 5 to 1.
Yeah.
I wouldn't do 5 to 1.
Not confident. There you
I mean,
have
we
it.
beat them 70 to 2. Yeah.
Not confident, Ben. That's the wrap. Stay tuned for the rest of the show. Appreciate y'all being here.
Hi, welcome to this segment when we're going to be talking about deals. It seems like there's a new deal every week, but this deal could be the biggest deal of the year. And we're talking about CVS and Aetna. I'm Ben Nye. I'm joined by Matt Krebsbach. And we followed CVS for a decent amount of time. We followed Aetna on the periphery as well. But this deal could really be transformational. So CVS provides, obviously, pharmacy services, and it has a retail business as well. But they really make a bulk of their money on the pharmacy benefit management side. So that means fulfilling prescriptions, and what they're supposed to do is negotiate prices with the drug companies themselves on behalf of the insurers and the payers. That has turned out to be a difficult place for CVS and their competitor Express Scripts to be in, because they turned out to be a middleman where there are significant agency problems, which means that there are conflicts of interest inherent in the business model. So in a really big surprise, I thought, on last week, CVS was reported to be in talks with Aetna to purchase the company, to purchase the health insurer. Aetna's a health insurer for over $200 a share. This would be about a $80 billion acquisition,
Be big, yeah.
and it would be the biggest acquisition by far in CVS's history, where the previous large acquisition was Caremark a number of years ago. So, Matt, what is your initial impression? Were you surprised by the deal?
Not really surprised. I think, we've talked about Amazon getting in this space before, in the PBM space, and that's a big deal. I mean, we've talked about how that space will probably reflect a lot with the grocery, what happened in grocery. Like, news comes out and you get pummeled. Like, the same news comes out, but you still get destroyed just because it's Amazon and they don't care about profits today. So the fact that Amazon is likely to be getting into the PBM space, I think CVS is kind of backed into a corner. That's probably the most, that move probably makes the most sense. I mean, if you look at Optum at United Health, they continually just crush it. I mean, I think they're
Optum is the internal pharmacy benefit manager
Right.
for United Health.
I think they're trying to replicate that, but I think it seems like a late move, in my opinion. It's a defensive move, I guess, and usually those don't turn out well.
It's a defensive move, and CVS is paying up for a company. If the deal does go through,
Right.
CVS is paying up for a company that has already rallied extremely strongly, not only the year to date, but really ever since the Supreme Court upheld Obamacare, the Affordable Care Act. And so, I mean, it does seem like a little bit of a desperate move.
I mean, that doesn't even consider like the integration issues. Like that's gonna be a big deal. Like, I mean, anytime you have huge moves like that with two like really different businesses, in theory it should work out, but that's gonna take a long time to actually flow through to get it to where you think it will look like or want it to look like.
After an initial move up, CVS actually sold off about 7%.
Yeah, it was heavy.
And so the market is also questioning this deal as well.
Mm-hmm.
Now, I know we kind of debated CVS back and forth when it was trading at $80.
Mm-hmm.
And the big conflict there was, well, you have a cheap company. Cheap meaning they're earning a lot per share and their price per share is actually not that high. So we thought, so bulls would say that, and I thought that the price was likely to go higher. Krebs had a little bit of a different take. And you want to explain why you were right and I was wrong?
I just think like it was just the Amazon rumors. I thought they would actually follow through. Like I feel like anytime you've seen rumors of Amazon doing something, they actually follow through with it. And then there's been reports of them getting licenses in states and them probably going to announce that in Thanksgiving. And you're probably going to see another step down, I would assume, by Thanksgiving. I didn't expect the huge gap down on that buyout rumor, but I mean, like you said, it's not like CVS isn't that in good position financially either. I mean, they have like net debt of over $20 billion. I mean, their market cap is only like 75 at this point. I don't think their balance sheet is that strong, so it's not like they're going to issue a lot of stock for it. Assuming this goes through, or assuming it happens, they're going to have to issue a lot of stock, probably take on a lot of debt. I don't know. It's going to be sketchy there for a little bit, I think.
If you're an Aetna shareholder and you're going to get CVS shares, the deal probably wouldn't go through until end of 2018 at the earliest, is my guess. Would you, as an Aetna shareholder, want to sign up for that, assuming and get maybe $200 in CVS stock? Or would you rather just say, hey, my company's doing fine. I just want to continue owning Aetna and, hopefully our share price goes up by a nice amount and we have a much simpler business than this mess with CVS at the end of 2018. What would you advocate for if you were an Aetna shareholder?
I mean, I don't know Aetna as well, admittedly, so I can't really give you that much detail, but I would assume they'd probably prefer staying where they are as a shareholder, I would assume. But let's say tomorrow gets approved. I don't think you'd see CVS stock moving that much. Like you just have this huge overhang of what happens, what doesn't, and I don't know. It's just, to me, it feels like dead money at this point.
Biggest catalyst for CVS, of course, is going to be what happens with Amazon. If somehow Amazon backs off its apparent intention to enter the PBM space, then CVS, that's probably the biggest catalyst near term. Although
to the downside. Oh, wait.
If they back off.
Oh, yes. Yeah. Yes.
If they do enter the space, I think the CVS is gonna be under pressure for quite some time. But even if they back off and say, we're not going into it now, do you see a big rise of the stock? That's question number one. But then question number two, as we were talking about, is everyone should know what Amazon's going to do because Jeff Bezos is not the only one making this decision.
Mm-hmm. So,
I mean, his bankers have to know what they're doing and any potential partners have to know. Not to mention regulators who they're, of course, in discussion with currently.
Yeah, I mean, I just I don't like the PBM space. I feel like you're just regulation-wise or like whatever happens with, laws changing, whatever. Like I think that's a rough spot to be in. You have continuously there's people attacking that space of just trying to get lower prices on healthcare because that's a hot button issue. So it's like always a news thing. Same with insurance. Like I don't know what insurance is going to look in 5 years. Like if you're CVS trying to buy into insurance, I think that's kind of sketchy. It's not like a sure thing by any means.
With presumably a ton of debt as well.
Yes.
So I think that's really kind of sums it up. I mean, watch this news, watch this space, watch Amazon, see if this deal goes through, but then also just be wary. I would caution to be aware of excess leverage in a low margin business in something that is looked as a price to as a cost to cut. So in CVS, you kind of have all three. Low operating margins, about 7%. A lot of leverage if this deal goes through. And they're a middleman, a cost to cut. So be on the watch out for that. We'll catch you back next time. Stay tuned for the rest of the show.
Thank you for calling Envision RX Plus. This is. How can I help you today?
Hi, my name is and I'm with the doctor's office. I never heard an option for me to choose to, and I need to see if a certain medication requires authorization.
Okay, and which doctor is that?
It's Dr. Madeline.
And I apologize for long waits, but how can I help you now?
I need to know if a certain medication requires authorization, and if it does, if I could do it over the phone, it's urgent.
Oh, okay. You're calling from the doctor's office then, correct?
Yeah, Dr. Madeline's office.
Okay, and what is the diagnosis for the patient?
Oh, let me look here. Management is intended for the breakthrough medications intended for the management of breakthrough cancer pain. The doctor's treating the patient's breakthrough pain.
Is it also for the breakthrough cancer pain or not? I typed out the description. I just wanted to make sure that I heard you correctly.
This is the breakthrough pain, yeah.
Good, okay. Is it also for the breakthrough cancer pain?
This is the breakthrough pain, yeah.
Good, okay.
Thanks, Greg, for that video. Obviously, we're not endorsing a political candidate in this episode. That's not the point of the clip that we showed. But the reason that we showed that clip is that unless you've been living under a rock for the past 5 to 10 years, you know that this is not the first time, nor will it be the last time that we talk about the opioid epidemic that is literally killing people in the United States to an astonishing degree. Last week, the CEO, John Kapoor of pharmaceutical company INSYS, INSYS, he still owns 2/3 of the stock. He was actually resigned as a CEO earlier this year. He was indicted on a number of accounts, charged with a number of accounts, including a nationwide criminal conspiracy to illegally distribute an addictive prescription painkiller. This was Subsys. It is only FDA approved to treat breakthrough cancer pain. It's not for general pain management, which you saw in the video. So what happened here is that it is alleged that he essentially bribed through kickbacks physicians and pharmacies to prescribe this drug, even though it's not for breakthrough cancer pain. Furthermore, this led to significant growth of the company and great success. Gross margins extremely strong. Last week, when President Trump declared opioid addiction a public health emergency, it coincided with the arrest of this guy, Kapoor. Now, the Wall Street Journal came out with an article and noted that this Dr. Kapoor, as he's known, was also charged with violations of federal mail fraud, wire fraud, anti-kickback statutes. And there's a lot more. There's a lot of smoking guns here. He pled not guilty, but, I mean, a lot of people underneath him have already pled guilty to these charges. For instance, the doctors John Couch and Shilu Ruan were business partners who earlier this year admitted to receiving kickbacks from INSYS and other crimes. They have been sentenced to prison for 20 years. Now, what will happen to Kapoor? Obviously this is going to go on for a long time. He was an extremely wealthy man. And he's probably going to be in these legal issues for quite some time. He already paid a $1 million bail to get out of prison. And this will continue for quite some time. And to the extent that he actually just does end up in prison, he's already 74. It's going to be near the end of his life. But I want to talk a little bit more about INSYS and how you can figure out these frauds very quickly. Obviously, you can watch that video that we saw earlier, but there are also other smoking guns. First of all, this is a company that spends tens of millions of dollars on drug R&D every year. Guess how many drugs they actually have? It's subsys, and they also have a cannabis. But people have been consuming cannabis since the dawn of man. Then you can also go and look at, what drugs are they currently in development? They have an epinephrine spray in development. Again, epinephrine is not new. You don't need to spend tens of millions of dollars to pour into R&D on such a spray. That is it's a guise under which INSYS can claim to be an R&D, a pharmaceutical company, putting tons of money into research and development, and therefore they need high gross margins, and look at how little profit they make because it's all going into R&D. Those R&D dollars can be allocated however they want. They have to do it accurately for the benefit of the shareholders, but they can really be allocated however they want. So let's take a look at the guy who's in charge of all this stuff. By a guy by the name of Dr. Venkat Reddy Goskanda. He went to college and he got his PhD in pharmaceutics. He's not a medical doctor. He got his PhD in pharmaceutics, which I don't even know what that is. I've never heard that before. From a university that I've never heard of before called Northeast Louisiana University. So an Indian goes to Louisiana and gets a degree, a PhD in something that we never heard of. He's been issued, quote, more than 50 issued patents and patent applications, and is the co-author on several peer-reviewed scientific publications. And he has over 20 years of research and development experience. I think it's pretty obvious when it comes down to it that this is a shell. It's a shell for Mr. Kapoor to make tons and tons of money, and he's doing it on the backs of health insurers. He's doing it on the backs of the American people, and specifically the most vulnerable of our population, those who are dealing with extraordinary pain, and it's killing them. It's literally killing them. And regardless of what happens with the legal system, I think the court of the public opinion is very clear on this, and I think you'll agree. That's it for Young Bucks. See you next week.
Tusk Media is a subsidiary of Narwhal Capital Management. Ratings and reviews of Tusk Media content are not to be construed as endorsements of opinions, analysis, or services offered by Tusk or its parent company. The opinions and predictions shared here are our professional beliefs at the time of publication. We are not under duress from any of the corporate entities mentioned. This is not a solicitation to take any particular action. Although we are investment advisors, this information should not be considered investment, legal, or tax advice. We strive to be as impartial, insightful, and accurate as possible. We base our opinions, analysis, and calculations on information we believe to be reliable, but we cannot guarantee its accuracy. We can, however, guarantee that our opinions will sometimes be flat out wrong due to a variety of factors. Employees and clients of Narwhal Capital Management may or may not hold positions in the securities detailed and may or may not hold these positions in the future. A full list of all securities purchased, sold, or held during the 12 months preceding the date of this publication can be provided upon request. Unless otherwise noted, all data accessed via MarketWatch or the Bloomberg terminal. Past performance does not guarantee future results. A copy of Narwhal's Form ADV is available at the SEC's website, www.advisorinfo.sec.gov, or from Narwhal upon written request.